K. Ability to create financial statement projections, P&L/income statement, cash flow, balance sheet, equity statements, etc. The FPAC framework specifically includes projections for income statements, balance sheets, cash flow statements, and equity statements as essential analytical capabilities for FP&A professionals. FP&A resources explain that financial statement forecasting integrates accounting knowledge, operational assumptions, and financial modeling techniques to estimate future organizational performance and financial position. Effective projections help management evaluate business strategies, allocate resources, assess financing needs, and prepare for changing market conditions. Income statement projections focus on forecasting future profitability by estimating revenues, costs, operating expenses, taxes, and net income over a specified planning horizon. FP&A professionals typically use historical trends, operational drivers, pricing assumptions, market conditions, and sales forecasts to build projected profit and loss statements. Revenue projections are often linked directly to customer demand, sales volume, and pricing strategies, while expense forecasts incorporate staffing, production costs, inflation, and operational efficiency assumptions. Industry FP&A materials emphasize that accurate income statement projections are essential for budgeting, performance management, investor communication, and strategic planning because profitability forecasts influence many operational and financing decisions across the organization. Balance sheet projections estimate future assets, liabilities, and equity positions based on operational forecasts and financing assumptions. FP&A professionals forecast working capital accounts such as receivables, inventory, payables, and cash balances while also evaluating debt obligations, capital expenditures, and equity changes. The balance sheet must remain integrated with projected income statements and cash flow statements because all financial statements are interconnected. For example, projected net income affects retained earnings, while capital expenditures influence both fixed assets and cash flows. FPAC preparation materials emphasize the importance of understanding financial statement relationships to ensure that projections remain mathematically accurate, operationally realistic, and aligned with strategic business assumptions. Cash flow projections are especially important because they help organizations evaluate liquidity, financing requirements, operational sustainability, and investment capacity. Cash flow forecasting estimates future cash inflows and outflows across operating, investing, and financing activities. FP&A professionals analyze working capital movements, capital investments, debt repayments, financing activities, and operational cash generation when creating projected cash flow statements. Organizations rely heavily on accurate cash flow forecasts to manage liquidity risk, support borrowing decisions, and ensure sufficient funding for operations and strategic initiatives. Modern FP&A teams increasingly use integrated planning systems, predictive analytics tools, and automation technologies to improve forecasting accuracy, accelerate model updates, and evaluate multiple scenarios under changing business conditions. The requirement regarding financial statement projections reflects the evolving role of FP&A professionals as strategic business advisors responsible for transforming operational assumptions into comprehensive financial forecasts. Finance professionals must combine accounting expertise, analytical modeling, business acumen, and communication skills when developing and interpreting projected financial statements. Effective financial statement forecasting supports strategic planning, capital allocation, risk management, performance evaluation, and executive decision-making. As organizations increasingly depend on dynamic forecasting and scenario analysis to navigate economic uncertainty and competitive pressures, the ability to create reliable income statement, balance sheet, cash flow, and equity projections has become an essential competency for FP&A professionals seeking to support long-term financial stability and sustainable organizational growth.